Good morning, ladies and gentlemen. Welcome and thank you all for joining us today at Ignitis Group full year 2020 results, as well as the strategic plan update. I'm Aine Rifel-Grinkevičienė, Investor Relations Officer at Ignitis Group. Today, I will be moderating this call. It's my pleasure to introduce that we are also hosted by Ignitis Group CEO Darius Maikštėnas, CFO Darius Kašauskas, Infrastructure and Development Director Dominykas Tučkus, and Head of Corporate Finance Jonas Rimavičius.
Hello.
Right after the presentation, we will address all your questions. However, you are able to send those through the box on your website screen or call directly to the numbers provided on the screen as well. Before beginning the presentation, let me remind you that this presentation contains forward-looking statements, which are subject to risks, uncertainties, and assumptions. You should not rely on these assumptions as well. And now, let me pass through the word to Darius Maikštėnas.
Good morning again. I'm really glad presenting you an overview of 2020. First of all, a few words about Ignitis Group. We are largest energy group in Baltic states, operating across Baltic states, Finland and Poland. We are very much committed to become CO2 neutral, and our fundamentals are aligned with ESG principles. Our core businesses are green generation and networks. Also, we are engaged in flexible generation and customer solutions and businesses as a complementary services. Our core markets, as I mentioned, 3 Baltic states, Finland and Poland. Main highlights for 2020. First of all, it was very good year for Ignitis Group. Despite COVID-19 challenges, we showed very solid financial performance. The growth of EBITDA was plus 12.2%. So we delivered our promise to our shareholders during IPO process that Ignitis Group is delivering resilient and growing revenues. We also strengthened our financial position during the IPO process, followed by improved S&P credit rating to the stable outlook of BBB. And due to our new dividend policy, we made a decision, the proposal to annual general meeting of shareholders to distribute dividends of 85 million for 2020. We are continuously delivering on our strategy, installing new capacities of green generation, progressing well on development of current assets, and facilitating a new project pipeline. Of course, the cornerstone of our strategy is ESG, so we are strengthening our corporate governance and sustainability measures. We improved our corporate governance by implementing 2 very well-known independent international supervisory board members. Also, we aligned long-term shareholders' interest with our remuneration policy and attained ESG ratings from global rating agencies such as MSCI and Sustainalytics. We really exceeded our guidance for 2020 by around 10%. All 4 segments delivered the growth. The major cause of exceeding expectations and exceeding the guidance was related to production, to generation. We had much better results of Kronis pumped storage hydro plant. which was operated quite effectively and effectively utilized fluctuations in electricity market prices. Also, we got much better as expected results from our CCGT gas-fired unit due to positive situation in the natural gas market. On top of that, customers and solutions also delivered small growth, while in the guidance we were expecting a small decline. A few words more about each of 4 segments, starting from the networks. Very strong financial performance, growth of EBITDA 10.2%. We had a slightly lower level of investments, 140 million over 2020. That was caused mainly by restrictions due to the COVID-19, which was limiting our field activities. Overall, strong performance on the quality of network. We had deterioration of SAIDI-SAIFI indicators in electricity, and that was caused to the storm Laura on 12th and 13th of March last year, which was the biggest storm in Lithuania history since 2005. On green generation, we are adding new capacities and we are adding additional growth of EBITDA. EBITDA grew by 16.8%. Green generation capacity grew by 20%. Investments was around 197 million euros. Slightly lower comparing to the last year. That was mainly related to Vilnius CHP development. Few words about our current assets under construction. So we just announced that we completed construction of wind farm in Poland, in Pomerania. 94 megawatts, so it's really to be launched in first quarter as it was planned. The same, according to the plan, we are proceeding with Kona CHP plant, waste to energy unit. Final COD is first quarter this year, and biomass plant unit COD is expected fourth quarter of next year. And we are proceeding with another wind farm. This one is in Lithuania, Mažeikiai, 63 megawatts of the capacity with expected COD in 2023. Another our assets which are currently under development, we are developing solar portfolio in Poland of 170 megawatts. CODs will be delivered during the year 2021 up to 2023. In parallel, we are engaged in the framework agreement and cooperation agreement with Ocean Winds to develop capacities and develop knowledge and jointly develop offshore wind in Lithuania. This agreement has two parts, and first part we have minority stake in UK and Moray West offshore wind project, and as a second phase we are preparing to participate in auctions for Lithuanian offshore wind park development with the size of 700 megawatts, something around 2023. And the fourth one asset which we announced that we are starting the project is Kona's pump storage hydro plant. We made a decision to develop it with the size of 110 megawatts. That was become feasible and possible to start this project after recent announcement of expected ancillary services which will be implemented after Lithuania will join continental European networks due to synchronization project. and we expect that this unit will have additional source of revenues providing ancillary services for TSO. Since it will be new, more than a block of such kind, it will be possible to deliver not only upstream FRR services, but also downstream services. And we are expecting that the price for ancillary services in Baltic region will converge at that time with European levels, somewhere around 4.5, 4.7 range. And the total need for such kind of upstream and downstream services in Baltic states, we project to be around 700 for upstream and 700 for downstream. So this unit will compete effectively in this market, and such model of hydro pump storage plant will deliver us possibility to increase the capacity around 2 times, since we will be able to bid for 110 megawatts for upstream and in parallel for 110 megawatts for downstream. So effectively we will have 220 megawatts of ancillary service unit proposition. On top of that, we will have additional upsell potential from providing other type of ancillary services and commercial services acting in the spot market, as we do right now with current 2 blocks. Going further to the flexible generation, it was really a record year for flexible generation-wise and EBITDA-wise. Growth comparing to the last year was plus 31.8%. Additional generation possibilities appeared due to quite favorable conditions in the natural gas market and quite effective work of our asset optimization unit. On the customers and solutions, we are continuing growth in Finland and in Poland, and total retail sales volumes increased quite significantly by 43%, from 13.4 terawatt hours of electricity and gas up to 19.18. On other hand, during COVID crisis and during COVID period, we had some negative effect of imperfect hedges. Those eliminated a little bit of additional revenues which were generated by new sales. So we have growth only 0.9% in EBITDA, but structurally looking forward, since this year and next year we will have much lower impact of imperfect hedges, we can be optimistic on the EBITDA development in this segment as well. Also in 2023 in Lithuania, in last year in 2020 in Lithuania, we had first phase of B2C market liberalization. It will be finished until 2023. Currently, customers and solutions of Ignitis is acting very effectively in new customer acquisition competition. Something between 65 and 70% of market share is the current achievement of Ignitis while acting as independent supplier to households in Lithuania. With that, I would like to pass the word to Darius Kašauskas to talk about financial highlights.
Thank you, Darius. I'm pleased to present financial highlights of Ignitis Group based on audited results for 2020. Glad to say we had successfully completed 2020 and with strong financial profile, strong performance. With COVID-19 in mind, the last year has proven the resilience of our business, which is backed by well-diversified asset portfolio. First, I will go through the KPIs related to profits and earnings. Adjusted EBITDA is our main KPI for financial performance. During 2020, we reached adjusted EBITDA almost 292 million euros. There are 5 main components and 5 main drivers for this growth. First one, RAB growth is in the network segment. Second, efficient use of Kronis pump storage hydro plant and Kona's CHP start of operations. Then better results of main units of flexible generation segment, expansion to Finnish gas supply market. Adjusted net profit grew almost 20%. Growth was driven by growth in adjusted EBITDA, which was partly offset by higher income tax expenses and lower tax relief on deferred tax expenses. If you look at the adjusted EBITDA bridge between 2019 and 2020, you can see that the growth was captured across all business segments. The largest share of adjusted EBITDA was generated by network segment. Increase was mainly due to growing value of regulated asset base due continued investments into distribution network. Green generation increased by 7 million euros. Increase was influenced by efficiency of Kronis pump storage hydro plant, caused by effective utilization of fluctuations in electricity market prices, and Kona's CHP start of operations. Flexible generation increased by almost 10 million euros. Increase was mainly caused by better results from CCGT commercial activities due to favorable market conditions for gas-fired power generation. Customer and solutions remained relatively stable despite expansion to Finland and better results in Latvia as well as in Lithuania. Positive impact was offset by B2B electricity results due to negative impact of proxy hedge results. Other activities decreased by 4 million euros. Decrease was mainly due to lower results on non-core businesses, which are gradually being divested. As a result of better performance, return indicators were improved too. Our return on capital employed reached 7%. An increase compared to 2019 was mainly driven by higher adjusted EBITDA and lower write-offs, revaluation expenses, and less impairment losses. Adjusted ROE reached 7.9% and was less by 10 basis points comparing to the previous year. And also net profit was offset by increase of capital during the IPO. Moving towards investments, green generation and network accounted for the majority of investments. Total investments decreased by 23% compared to 2019. The largest share of investments was allocated to green generation. However, it was by 57 million euros lower comparing to 2019. This was led by lower investments in Vilnius CHP. So investments declined due to construction schedule, COVID-caused delays, and contract default. The decrease was partly offset by high investments in construction of Kona CHP and Pomerania wind farm. In networks, investments were lower by 38 million euros compared to 2019. Decrease was mainly driven by lower investments in expansion of electricity and gas distribution networks due to COVID-19, as well as overall decrease in new customers' connection and upgrades work fees. Over the last year, the group has significantly improved its financial capacity by strengthening equity capital base. This led to net debt decreased by around 370 million euros, or about 38% compared to last year. Net debt to adjusted EBITDA ratio decreased year over year from 3.7 to 2.1 times. This was also affected by IPO proceeds and generated 313 million euros from funds from operations. Overall, we now have an even stronger balance sheet and funds available to support our growth projects while ensuring credit rating of BBB or above. Our free cash flows increased to a level of 48 million euros, which was mainly due to higher EBITDA and as a result of higher FFO, lower than projected investments, and positive change in net working capital. And lastly, from the earnings we generate, as we promised, we will distribute 85 million euros of dividends for 2020, and this is in line with our updated dividend policy. Dividends of 42 million euros for the first half of 2020 was paid for prior to IPO, and the remaining part of 43 million euros for second half of 2020 is subject to approval of AGM on 25th of March. Moving on the outlook for 2021, we expect to see adjusted EBITDA growth in all business segments in 2021 compared to 2020, except flexible generation and other activities. Networks shall continue to increase due to our ongoing investments program related to maintenance and expansion of electricity and gas distribution network. Green generation is also expected to be higher because a full year of results of Kona CHP will be accounted this year. Also, as well, Pomerania and Vilnius CHP waste energy units starting their operations in Q1 2021. And flexible generation segment expected to decrease due to very favorable conditions which were last year, and we do not foresee the same situation in 2021. Customers and solutions results is projected to increase due to the increase in electricity B2B part, which in 2020 suffered due to COVID-affected negative impact and proxy hedge results. The other results is also forecasted to decrease due to our strategy to divest non-core activities. Overall, this will give us from 3 to 6% higher adjusted EBITDA for the full year 2021 compared to last year. And in summary, our financial performance in 2020 shows the resilience of our business during COVID times. And in 2021, it should be further supported by the continuing growth of our investments projects. With this, I hand back to Darius Maikštėnas to sum up our achievements for 2020.
Thank you, Darius. So really, last year was a year of growth across all business segments. We are demonstrating very high level of resilience to the COVID. Our guidance was exceeded by 10%, delivering EBITDA of 291.6 million, mainly due to the larger amounts of green and flexible generation. We improved our leverage metrics following the IPO. We are really well progressing with green generation pipeline. We expected to continue on the same pace in 2021, mainly with green generation and delivering on our IPO promises on sustainability, governance, and dividends. Now I would like to continue our presentation with our strategic plan, which was approved for 2021-2024. We are very much committed to our 4 key strategic priorities. First of all, creating sustainable future without coal and nuclear exposure, with clear plan to become CO2 neutral and being ESG principles driven. Also, our strategic priorities ensure resilience and flexibility of energy system and enable transition to and evolution to new modern ecosystem of new generation energy in the region. Also, the core priority how we deliver this is first of all growing renewables, meeting regional and national energy commitments. And also we are capturing growth opportunities while developing innovative solutions and making our customers' life more easier, simple, and energy smart. ESG and sustainability is at our core of our strategy. Therefore, one of main topics for us is transition to CO2 neutrality. Also, our commitments and contribution to UN Sustainable Development Goals. We will continuously improve our governance frameworks and processes, seeking for best global practices in this area. And we are very much committed to our accountability, seeking to disclose the group progress by using globally recognized standards and formats suited to broad range of our stakeholder needs. And of course, we will continuously measure our progress using international benchmarks such as ESG ratings of MCSI and Sustainalytics. On strategic plan, main focus of our investments in green generation and networks. Both of these areas expected to be invested in the range of 45 to 50%. The rest of allocation is dedicated to flexible generation and customers and solution. Overall, during this period, we will invest 1.72 billion of euros, and up to 90% of all investments will be SDGs related. Now I will pass the floor to Dominykas Tučkus to talk more about our green generation plans.
Yeah, so before that, I think Jonas will cover green generation and I'll cover the rest of the business lines.
Sure, thanks, Darius. So I will start with a reminder that there are plenty of green generation growth opportunities in our target markets. As you can see in the map on the right, we expect to see around 24 gigawatts of capacity additions by 2030 across our region. And there are multiple reasons why this growth will come. So firstly, there is a structural electricity deficit in Lithuania. Currently, we generate only around 1/3 of our needs, and the remaining 2/3 are imported. And new generation is critical to fix that. Secondly, Poland is still very much dependent on coal generation, which accounts for around 80% in Polish generation mix. So again, this coal needs to be phased out, and will be replaced with renewables. Thirdly, there is a similar situation in Estonia with phasing out of oil shale, which currently accounts for around 60% of Estonian generation. And again, this is likely to be replaced with renewables over the years. And finally, all three Baltic countries and Poland have introduced renewables-focused climate strategies, which support the extensive renewables build-out over the region. And this is already clearly visible from the approved and planned auctions between 2021 and 2024 across the region. There's already more than 10 gigawatts of such auctions. And this can easily go above 15 gigawatts if Poland continues auctioning at the same pace as it is approved for 2021. And on top of that, it's clear that subsidy-free onshore wind is already here, and we are approaching the same situation with solar. So effectively, that means that projects which will start construction during 2021 and 2024 might even exceed the 10 or even 15 gigawatts which I mentioned previously. We ourselves target to reach between 1.8 and 2 gigawatts of installed green generation capacity by 2024, on our way to 4 gigawatt target by 2030. We are well on our way to this target. We are progressing well with all of our projects under construction and under development. As Darius already mentioned, Pomerania and Vilnius CHP waste energy unit is due to be launched this month. Vilnius CHP biomass unit is reshuffled and is planned to reach COD in the end of 2022. And Mažeikiai wind farm is on track to reach 2023 scheduled COD. We are also working closely with our partners to develop up to 170 megawatts of solar PV in Poland. And all in all, this leaves us with around 300 to 500 megawatt gap to reach 1.8 to 2 gigawatt target by 2024, which we think is a very achievable one. Post 2024, we are already working on preparing for offshore wind in Lithuania, and started procurement planning for Kruonis pump storage plant expansion. Over the next 4 years, we plan to invest up to 1 billion euros in our green generation segment. And we will do that by keeping disciplined investment policy. In other words, we are going to grow, but we are not going to grow for the growth's sake. We will only invest if we meet our target return criteria. And we target high single-digit to low double-digit returns on a levered equity basis. In terms of the entry stage, we primarily focus on greenfield and early to late development phases. We also aim to partner with strategic investors to adopt new technologies and or enter new markets, similarly as we already did for offshore with Ocean Winds and for waste energy with Fortum. And finally, we also plan to utilize asset rotation program, which means that we intend to sell up to 49% stake in each individual project in order to both capture premium and to recycle capital for future growth. And the last very important thing to point out in the green generation segment is our synergies with our customers and solutions business. And in addition to the capabilities to balance, hedge, and predict renewable production, there is also our customers and solutions business have a large supply portfolio, which is more than 10 times bigger than our generation portfolio. Effectively, this 5 terawatt-hour gap can be filled with new merchant renewables capacities without increasing the overall exposure to electricity prices on the group level. To illustrate what it means that those 5 terawatt-hours can be translated into around 1.5 gigawatts of wind capacity. So this is a big competitive advantage of Ignitis Group, and we obviously intend to utilize it in order to reach our strategic targets. And with this, I pass the word to Dominykas to present the network segment.
Thank you, Jonas. So our network segment is the largest network of electricity and natural gas distribution in the Baltic states. We're covering more than 99% of Lithuanian market for distributed energy. The business model is based on regulated allowed revenues, which comprises basically out of pretty standard formula. So return on investments plus depreciation and amortization. And then we're compensated also for some pass-through items such as OPEX, technological losses, and temporary regulatory differences which occur annually. The return on investments is one of the key components is WACC, and the currently applied WACC of above 5% for electricity and close to 4% for gas is applied in 2021, while in the forthcoming regulatory period, the regulator has already announced some changes in the methodology, and as a result of which we expect WACC to be for electricity to be between 4 and 4.5%. The new regulatory period for electricity will start in 2022. We're planning to invest into our networks and to grow our regulated asset base. In the period until 2024, we expect to invest between 800 and 900 million euros, of which almost half would go into maintenance capex, so to increase the resilience of our networks and the quality of services that we provide, and the rest will go into growth capex, so new connections and connection upgrades, as well as special project, the rollout of smart meters. In the period of 10 years, from 2020 to 2029, the overall investment is expected to be around 1.9 billion euros, of which 60% would go into maintenance and the rest would go into growth capex. Our average capex in networks, excluding COVID effects, in the long run should be around 170 million euros annually, and in the period until 2024 we have a special strategic project of smart meter rollout which will increase capex in this period. Our focus in networks is on efficiency and digitization of our network. So in terms of efficiency, our key target is to improve the quality of services that provide and to improve our SAIFI indicator by more than 10% in the period until 2024. In terms of digitization, we expect to roll out our smart meters and to cover 90% of our consumption in the distribution network by 2024. Now we'll pass on to flexible generation. So we operate a fleet of more than 1,000 megawatts, and we're providing several types of ancillary services, and we expect to provide these services until 2024. So both tertiary reserve capacity and isolated regime services are expected to be provided until 2024. On top of that, we are also using our fleet for merchant generation, and 2020 was exceptionally good year due to very favorable market conditions. However, going forward, we expect the margins in merchant generation to be a bit lower due to increasing gas prices and emission allowances. Going forward, we expect to employ our fleet for new types of services provided to the TSO after 2024. In customers and solutions segment, we expect to grow our portfolio to roughly 22 terawatt hours by 2024. We're focusing in B2B market on our home markets, so increasing the market share and our business in Lithuania, Latvia, Estonia, Finland, and Poland. We expect to expand further using the opportunities in Poland and Finland with new infrastructure coming online. In B2C segment, in Lithuania, we expect to retain a leading market position with the undergoing deregulation process of electricity retail market. Generally, our focus in the customers and solutions segment is to exploit the synergies with green generation segment, with the offtake and PPA arrangements between our customers and solutions segment and the green generation growth. We expect further to scale up our innovative solutions which have been already introduced or being introduced in the Lithuanian market. And with this, I pass the word to Darius to cover the financials.
Thank you, Dominykas. So over the strategic plan period, we expect to grow by around 5 to 8% annually, having a main driver of this growth like green generation segment. Adjusted EBITDA is expected to reach 350 to 390 million euros in 2024. Average adjusted return on capital employed during this period is expected to be around 5.5 to 6.5%. A revised WACC in the next electricity DSO regulatory period is a key driver for a lower targeted level of returns of this period to 2020, 2021, 2024. Having strong financial steady to fund our growth. Over the next 4 years, we will keep sound leverage metrics. Net debt to adjusted EBITDA is expected to be lower 4 times during this period. FFO to net debt is expected to remain above 23% during the same period. And we are committed to solid investment grade rating for a long-term period and over the next strategic period, 2021-2024, we expect even to keep BBB plus rating as our current credit rating from S&P. As we grow our business, we are committed to deliver dividends in line with our business growth. Following the IPO, we have reviewed our dividend policy, and it is now based on fixed starting level of 85 million euros declared for 2020 and a minimum annual growth of 3% going forward. And we also have a flexibility to distribute excess cash if it's available. And with this, I give back the floor to Darius Maikštėnas.
Thank you, Darius. So overall, summarizing strategic plan for 2024 and comparing to the last one, we will keep the same level of investments during 4 years, investing between 1.7 and 2 billion euros. Green generation capacity will grow up to 25%, up to 1.8 to 2 gigawatts of green generation. And we are providing adjusted EBITDA guideline, which we expect to be in 2024 between 350 and 390 million of euros. Financial performance and financial indicators are very important, but since we having very core commitment to sustainable growth and sustainable development, we are putting very strong efforts and measuring the goals and setting the goals much beyond just financials. And therefore, we are measuring ourselves on international ESG ratings, mainly Sustainalytics and MSCI. During this period until 2024, we will aim to improve those ratings. Sustainalytics, currently we have medium risk category, and we will try to approach low category, and we will also aiming to improve our MSCI ESG rating from A to AA. In each of ESG dimensions, starting from environment dimension, we will have a comprehensive plan of activities and goals. In environment, we will continue to develop our green generation capacities. Also, will roll out further on our EV charging network, which we expect to be tripled during this period. And also, we will align our greenhouse gas emissions management plan with SBTIs. We will continue our developments and our efforts, of course, on energy efficiency, as well as air, land, and water quality measures. On the social dimension, we will remain very much committed to occupational health and safety commitments towards our employees. Also, we will do much more work, and we will try to engage much more with the local communities, since while implementing more and more renewable generation projects, we are coming closer to those. We will try to keep quite high employee engagement and satisfaction level, because we really believe that this is people business, and really qualified and motivated people are creating sustainable business and sustainable future for the next generations. And also we see an area for improvement and area of focus to improve employee diversity. Especially we have to work more on the gender balance in engineering and IT. We started quite a lot of initiatives in this field, and we will continue with those. and also the leadership pipeline and gender equality on this dimension. It will be our continuous focus as well. On corporate governance dimension, this period we will focus much more into towards our value chain, to making measures to expand our code of ethics principles towards our supply chain partners. We will continue our very strong focus on transparency and anti-corruption measures. And also we will develop and we will maintain a lot of sustainability governance, new instruments, and deep accountability and reporting in this very important area. Summarizing our strategic KPIs for this period, our key focus is growing renewables. So here we are reaching up to 2 gigawatts of installed green generation capacity. We will work further on to improve resilience of our networks, improving especially SAIFI indicator, and we will have huge rollout of smart metering and other network digitalization initiatives to make distribution network much smarter and much more efficient. We will maintain our strong position in flexible energy ecosystem, and we will scale our retail sales across the region, reaching around 22 terawatt hours of electricity and gas. We will continue with our developments to become CO2 neutral. We will maintain all necessary and always improving measures towards safety at work, monitoring and continuing with especially TRIR indicator and aiming for zero fatal incidents. We will aiming to maintain employee NPS very high level, which we are currently already have, and will try, as I was talking before, we will roll out the measures to improve our ESG indicators in MSCI and ESG, to improve at least one or both of them. And we will invest into the growth of up to 2 billion of euros. That will create from 350 up to 390 millions of EBITDA in 2024. We will maintain return on capital employed in the range of average between 5.5 and 6.5%. We will keep sound leverage below 4 times EBITDA, BBB plus investment grade rating, and we will have continuously growing stream of dividends. So summarizing, we reiterate commitment to create a sustainable future. We will invest up to 1 billion into green energy regional transition, creating EBITDA from 350 to 390 with very disciplined financial policy, sound leverage metrics, while maintaining solid investment grade rating and growing dividends. With that, we are ready for your questions.
So thank you very much for the presentation, and we shall start our questions part. So we have more than 15 questions, and the first one is, great presentation about future of the company. However, I would like to ask about investment in your employees. You mentioned that your employees are driving sustainable business of Ignitis. How do you invest in them and improve their qualification for future years? Also, what is the attrition rate at Ignitis?
Thank you for the question. We are continuously improving and investing into our employees' development and well-being, and a really strong indicator showing The situation is our recent improvement in employee NPS rating, which reached the levels beyond 50%. I cannot right now indicate attrition rate, but it's a quite healthy one over different segments. Also very important to notice that we have quite extensive internal and external education programs to our employees. We promote horizontal career initiatives across our group, and also last but not least, we are aiming and we are proposing for AGM to update our group remuneration policy, which will make possible to all employees also to participate in option schemes as well.
Thank you, Darius. The next question is, what is expected negative financial effect on EBITDA level due to potentially decreased regulated return on equity on networks?
Thank you. Maybe Jonas, can you comment on that?
Yeah, sure. So, I mean, the sensitivity here is that 1% decline in WACC is roughly, since we have 1.6 billion or 1.7 in regulated asset base, so it's around 16 million. So since the decline is a bit expected, decline is around or a bit less than 1%. This is the rough estimate.
Thank you, Jonas. The next question is, thank you for the presentation. Could you please provide some guidance on your total investments level plan for 2021, either on group level or by segment?
So since we, in the strategic plan, we disclosed that we will invest between 1.7 and 2 billion. So dividing that by 4 would be a rough estimate on what we plan for 2021.
Thank you, Jonas. The next question is, what are your expectations for staff cost and how are you dealing with COVID-19 challenges in terms of working from home?
So in terms of COVID-19, we managed to deal with COVID situation quite effectively. Just in March, starting with the first wave of COVID, we managed quite effectively to move all office workers to work remotely. We have quite extensive system of monitoring and helping employees to cope with the safety measures. Actually, the eNPS of employees during this COVID crisis waves improved quite significantly. We see strong engagement and strong productivity even during those times. So no big shake-ups related to COVID situation on the employee side.
Thank you, Darius. The next question is, hello, I would like to ask, what about gas industry? If in this segment are also planned to invest, for example, smart meters for gas or other new technologies?
Thank you. So on infrastructure side, we do not have plans to invest into smart metering in our DSO of natural gas. The main investments will be dedicated to mainly maintenance of the network and occasional connection of large B2B customers.
Thank you for answering that. The next question is, could you say any estimation on probably reduced WACC in networks for electricity in terms of EBITDA? And also, how do you see smart meters will help to the group, like in terms of growth or efficiency? Thanks.
Thank you. So I will start with smart meters. Smart meters will have several effects for the group and the customers. As the network will become much more digital, so we will have much more information on the network efficiency that will help company to make investments and maintenance more efficient, first of all. Also, it will help our customers to save on electricity consumption, employing more sophisticated methods of energy savings. And on WACC, Jonas, maybe you could comment more.
So just to repeat, roughly 50 and 16 million is the impact on adjusted EBITDA from 1% WACC decrease.
Thank you, Darius and Jonas. The next question is from Igor Kuzmin from Morgan Stanley. When may the regulator release regulatory electricity WACC and RAB for the new regulatory period?
Thank you. Dominykas, could you?
Yeah, so the methodology for WACC has already been released by the regulator, and the exact estimates of WACC to be applied in the new regulatory period is usually released in the second half of the year, prior to the start of application of the new WACC. For the regulated asset base, the regulator is still in discussions, internal discussions, and procurement of a consultant who would be helping the regulator to establish the exact methodology for the new regulatory period. But we would also expect to see more clarity probably in the second half of this year.
Thank you, Dominykas. Igor had one more question. Was any of Ignitis solar capacity selected as part of the end of 2020 renewables auction in Poland?
Well, the capacity of 170 megawatts or up to 170 megawatts is still in progress, work in progress, and they are basically going through various stages of development. Worth noting that 170 megawatts is basically split into many small projects. And in 2020, they have not reached yet the maturity where they would be selected for auctioning. But we expect this to come in the next auctions.
Thank you, Dominykas. The next question is, thank you for the presentation. Could you please explain adjusted EBITDA and net income are adjusted to what in comparison with reported both EBITDA and net income? Thank you.
Thank you. Jonas, could you?
Yeah, so we have that in the appendix. So for adjusted EBITDA, right? So we are adjusting it for first of all for temporary regulatory differences, meaning that what we eliminate the result which is related either to the past or to the future. So we are showing purely this year's result. The second adjustment is fluctuations in derivative products, which is not again related to the current year. The third item is the cash effect of new connection points and upgrades, which effectively means that because of IFRS, we need to recognize revenues from connecting the customer throughout the lifetime of the connection. However, the cash is being received in the present period, so we adjust for that. And others are smaller one-off items, such as unusual gains and losses. So that's about it for adjusted EBITDA, and then for the net profit. So we apply all the same adjustments as for EBITDA, and then on top of that, we are eliminating one-offs which are below EBITDA level, as well as revaluation of emission allowances, which is again non-cash related temporary movement. And finally, there is an adjustment for income tax impact of all the other adjustments. So that's the way we do the adjustments. The overall goal is to normalize and show the result of the particular period.
Thank you, Jonas, for answering the question. The next question is on dividends. According to dividend policy, Ignitis should pay 80% of the net profit as dividends, but proposal for the year 2020 is only for 25% of net profit. Why so big difference comparing to dividend policy?
So again, before entering IPO, we approved new dividend policy to be quite simple and having quite strong visibility for future dividend flow. And the current and only one effective dividend policy is 85 million euros dividend payment for 2020 with at least 3% growth annually. So this is the only one valid dividend policy which is applied to Ignitis Group.
Thank you, Darius. The next question is, what is your view on recent announcement by Regulator to cancel previously planned auctions for renewable energy projects?
Thank you. Jonas, could you elaborate?
Yeah. So, I mean, the view is that effectively, as we mentioned in the presentation, that we are seeing that that onshore wind is already possible on the subsidy-free scenario, and the same is approaching for solar. Therefore, this change of plans does not have any impact on our plans.
And on top of that, I could add that the situation in Ignitis Group, where we have about 6 terawatt-hours of supply portfolio, which is not matched by production, help us in this respect also to be quite confident while implementing additional green generation capacities in the region.
Thank you, Darius and Jonas. Another question is the 30-year EBITDA assumption for Pomerania wind farm announced after the yearly results already accounted for in the outlook for 2021, published in the financial report of the year?
Jonas, could you?
The short answer is yes.
We have one more question with regards to Pomerania. Your forecast Pomerania project to create 440 million euros EBITDA within the next 30 years. What is expected return on equity of this project?
So in terms of expected return on equity, this is in line with our target returns, which are between high single digit to low double digit on the levered equity basis, and actually it's toward the higher end of that.
Thank you, Jonas. The next question is, do you have plans to expand beyond current markets during 2024-2024 period?
Thank you. Main focus in this period will remain Baltic states, Finland and Poland. Having said that, if we will see some very attractive growth opportunities, we will seriously evaluate those.
Thank you, Darius. The next question is with regards to the investments. What are priority areas for the short and long-term period investments?
Thank you. Again, investment priority areas we quite clear indicated in our strategic plan. We are focusing to expand our green generation capacities quite significantly. And also we are maintaining investment into networks. First of all, increasing resilience of those networks due to really changing environment conditions due to the climate change. We need to improve that resilience and also digitalization of the networks. So those two core investment priorities are for the period. The rest are related to innovations and new services in customers and solutions segment, and some maintenance capex on flexible generation.
Thank you, Darius, for answering the question. The next is with regards to flexible generation assets. What do you expect for CCGT merchant volumes in 2021? What level of regulated electricity WACC is assumed behind the 2024 EBITDA range of 350 to 390 million euros?
Okay, Dominikas, could you elaborate on CCGT?
Yeah, so on CCGT, probably 2020 was the most successful year in the last 5 years for merchant generation, and going forward, probably in terms of volumes, we might see significant production, continue seeing significant production. However, the margins might be lower due to increasing gas prices and emission allowances.
Thank you.
And in terms of WACC included in the guidance, it's in line with Dominik as mentioned during the presentation, between 4 and 4.5%.
Thank you, Jonas, Dominikas. The next question is on customers and solutions segment. Could you please elaborate on the LNG designated supply role situation at the moment?
So currently we are in the talks with a supplier, and since discussions and talks not finished yet, we cannot provide any additional information on this topic.
Thank you, Darius. The next question is, are there any plans to be involved in offshore wind in Poland?
Any new plans, if it will be significant, we will announce using common practices to all shareholders at once.
Thank you, Darius, for answering that. The next question is, having smart meters in itself does not necessarily lead to lower energy consumption. They require increased energy literacy from consumers. Could you maybe comment on what role you see Ignitis playing in educating consumers on energy efficiency possibilities?
So Ignitis really sees quite a significant role in promoting and educating society on energy efficiency measures and possibilities, going beyond just B2B, which was currently primary focus, and as smart meters will be rolled out nationally, that focus will expand to the households as well. Of course, a part of it will be taken by some measures will be taken by DSO, our SO operation, and also energy suppliers, our customers and solutions segment will implement additional applications, products, and propositions to make energy saving easy and smart.
Thank you, Darius, for answering the question. The next question is, could you please comment once again on leverage metrics and free cash flow and dividends?
Okay, thank you for the question. So net debt to adjusted EBITDA, you can jump to our presentation slides. Last year, after IPO, after IPO proceeds, we received our net debt decreased, so from 3.7 times at the end of last year, at the end of 2019, decreased to 2.1 times at the end of 2020. So again, this was impacted by issue of share capital, and also another important driver was our funds from operations, which were amounted to 313 million euros.
Thank you, Darius, for answering the question. One more. What power, gas, and carbon prices are assumed as part of 2021 EBITDA guidance?
Dominikas, would you elaborate?
Probably we cannot point out the exact prices, but you can look up the prices in future curves for all of these commodities. So we are just applying a standard methodology, which would be applicable by most of the utilities.
Thank you, Dominikas. Our next question is, some economists say that one of the main objectives of Ignitis Group should be maximize efficiency of the electricity, gas consumption in the country. What kind of measures, if any, Ignitis Group plans to use in order to achieve such goals?
So our major efficiency source from our operations, how we can contribute to the group, are going through digitalization of the network, which gives additional possibilities to businesses and consumers to apply smart technologies to optimize the energy usage. Also, our customers and solutions division also providing a lot of energy saving, green energy propositions, promoting as well electric vehicle infrastructure and other products which are in the long run will make a lot of savings for the society.
Thank you, Darius, for the answer. Our next question is, what are the plans to investments in solar energy development?
Thank you, Jonas.
Yeah. So solar is part of our target technologies in the green generation. So part of the up to 1 billion of capex, which is dedicated for green generation during 2021-2024, will be invested in solar. Of course, we still see wind as a major space where we will invest over the coming years.
Thank you, Jonas. The next question is, you are proposing for shareholders meeting to approve own shares buyback reserve of 23 million euros. Please give the guidance of this buyback, including pricing, terms, market.
Thank you, Jonas. Maybe you can put it in.
Yeah, I mean, so the decision to form a reserve is in no way related to any actual buyback at this stage. It's just keeping the optionality for us, because the reserve can be formed only at the AGM. So in order for us to have this flexibility, we are creating it. But there are no details and no fact that we will be using it.
Thank you, Jonas, for answering the question. We have a new question. Could you please provide your expectations for Ignitis offshore wind project? Do you expect it to meet your targeted returns, with or without subsidies? And how much is the technology more expensive versus onshore? Thank you.
Yeah, so generally speaking, yes, we do not invest if we don't meet our target returns. So we would make a decision to invest only in case we are confident that we would meet our target returns. Then when it comes to the type of support mechanism, the government has announced last autumn about the potential CFD mechanism to be in place. And yes, if this would be auctioned, we would take part in it.
Thank you, Dominikas, for answering that. Our next question is, hello, thank you for the presentation. The question is, how do you see evolving electric car trend could affect financial performance of the group within 5-7 years from now? Do you see how company can benefit from this trend? And if yes, what actions do you plan to take in that way?
Thank you. So we really believe in electric vehicle future. So therefore we started to develop and we roll out it public charging stations starting already for 2 years. And we will continue to expand this network during the strategic period. We aim to triple amount of public stations and expand the network. Having said that, significant impact to the financial performance of the group we cannot expect in such a range of time, since due to the fact that total customers and solutions contribution to the EBITDA is around 4%. So it will be relevant, but not a major factor for overall financial performance for the group.
Thank you, Darius. We have the next question on the shareholder distribution. Are there any shareholders having more than 5% stake in the company?
The answer is no.
Thank you, Darius, for the straightforward answer. The next question is on Kronis PSHP financing and returns.
Okay, Dominikas, maybe you can talk a bit more about Kronis.
Yeah, it was covered quite extensively during the presentation. But generally speaking, we're planning to tap into the ancillary service market, which is expected to be launched in 2025. So it is aligned with the synchronization project of Lithuania with continental European networks. And this January, the 3 TSOs of the Baltic states also announced the expected volumes of ancillary services. Frequency restoration reserve capacities and the basically have been announced, and this is the market that we are targeting. We're planning to finance it with the usual structure applicable in such projects, with both debt and equity, and we expect the project to meet our usual return criteria.
Thank you, Dominikas, for answering the question. The next one is also on flexible generation. Do you have any plans to develop flexible generation for balancing usage, for example, from prosumers? What would be the largest regulatory and technical challenges?
Dominikas, maybe you can explain.
This has been already discussed in many countries, the usage of basically customer base for balancing services, and this would become more possible with actually smart meter rollout. So with the smart meter rollout, we would be able to see the usage at any point of time by specific groups of consumers, and the consumers could benefit actually from this development. But I should probably say also that this is a bit longer target, so probably coming in more likely after 2025.
Thank you, Dominikas, for answering the question. Our final question is, do you intend to abandon internal purchasing between group companies to avoid conflicts of interests?
Thank you. So we do not have internal conflict of interests. We have a shared service center in which we concentrated some common functions like centralized procurement or accounting or legal services. So therefore we will continue to maintain this model, which is typical for international groups, business groups who try to gain the synergies and efficiencies while maintaining common functions and common services in common shared service.
Thank you, Darius, for answering the question. This now concludes our presentation. Please be reminded that the record of the presentation, as well as the presentation deck, you will find at Ignitis Group website. Ladies and gentlemen, thank you once again for joining us, and have a pleasant day.